This one strategy helped me take the small account to over $10,000 in just 1 month. And chances are you're losing money because you are not focusing on this strategy right now when it comes to your trading. But don't worry, because I'm gonna teach you in under 5 minutes. So that brings us to the strategy, and it is risk. And you're like, Tyler, you lost me. What are you talking about? That's not a strategy. How do I trade based on risk? And if that is your reaction, then this is exactly the video for you. So how I'm gonna break this down is basically 3 parts: the explanation, the direction, and then the execution. Because this video is gonna be built around small, large, and even medium accounts, or whatever that may really consist of. Because I can guarantee you, my risk and your risk are totally different. That brings us to topic number 1. Now, usually when you watch these videos of someone showing on a chart magical numbers, you're going to the moon, you're absolutely rich by the time the video ends. But from personal experience, I like to keep it simple, and I like to explain it to you like you're 5 years old.
Why don't you explain this to me like I'm 5?
So what is risk? So in simple terms, risk is just the amount of exposure you have to danger. So in this case, how much money you're gonna lose. However, what if I told you you're looking at risk totally wrong? Because you cannot look at risk without looking at reward. Because when you look at reward and risk, that creates R value, and that is the foundation, and that is the strategy. Now, if you hate math, then you're gonna hate this part, but it's very simple, so stay with me. The formula for R is reward over risk. I know, that can be a little bit confusing. I have an idea, so hang on. Now I'm gonna give you an extremely short, sweet example of this on a chart. This is the SPX, but it really doesn't matter what we're trading. Now let's say I enter out of the gate right here, and it's gonna come out to a 1-to-1 ratio. I'm risking the same amount I'm trying to make. In this case, let's say $1. So I'm risking $1 to make $1. Best case scenario, I come out of this trade and I have $2 if it takes my profit up there, or you come down and lose and I'm at 0. That's the trade. All right, we're back, and I hope that kind of clarified some things, but there's more, and we need to get specifically on you. This brings us to number 2, and it kind of is where the rubber meets the road, so you need to pay attention to this, because when we go to execution, it's going to tie right back into this area. Chances are, when you got into day trading, you thought you were gonna make a lot of money very fast, minimal work. That's not how it works. Chances are, if you got down that path, you started risking a lot more than you should have, and on top of that, you started taking profits at awful times. Because let me tell you, you can have the best trading strategy in the world, but if you don't know how to allocate your risk, one trade will wipe you out, or you'll miss out on that one big trade that could have made your entire week or month. So what I'm gonna use is myself as an example on how I started growing that small account. And again, if you've watched any of the previous videos, I do recommend having between 4,000 and 5,000 before you consider getting into day trading. Because in my opinion, it's not worth it just coming in with a few $100. You're not gonna make enough to subside or to make a living off of that amount in any sort of way. I know I'm being honest, and it's probably gonna get me in trouble. So for everyone, this will be relatively different, but if you're trading something like futures, forex, commodities, crypto, it doesn't matter. This will all still work, and those can kind of be easier if you're used to it, just watching the specific dollar amount as you're going down, and it can be really easy to calculate those as well. Options are just what I do, and that's how I make my money. So when you're starting with something like a smaller account, which I would say about 2,000 to 4,000, a medium account, 5,000 to 7,000, and anything above 10K, in my opinion, is a really good size to be trading with. And I know some people that are trading with over 100K, which for me, I don't have the self-control to not enter crazy trades and start to kind of over risk or get emotional when it comes to that type of money. Again, I'm not a millionaire. I'm just being real with you. So in each trade, I like to risk about a maximum of 2% of my account. So if you're starting with my small account challenge, which was at $5,000, that's about $100 per trade you are willing to lose. However, I'm always looking to make around 400 to 700 per trade. And that is just in the beginning of the account. As it grows, these numbers will fluctuate as well. So when I'm looking to enter a trade, this is what I'm doing. Since I'm risking 2% of my account, that means I'm trying to get in with roughly $1,000 on my account total. I have stops automatically set out of the gate, so I can only risk 2% of the equity that I just put in. And if I enter that trade with $1,000, that means I have a 10% stop loss from where I enter that trade. But if I enter something with like 500, I can have a 20% stop loss. It's all depending where I'm at and how much equity I'm putting into each trade. But for me in the beginning, it was always putting 1,000 in and around a 10 to 12% stop loss. Yes, I would go around 2.2%, fluctuating depending on how or what I was trading. I get it, I may have lost you, so back to the charts. Okay, so we have our original trade where it's a 1-to-1 risk ratio. But earlier I said I was gonna risk $100 to make 400, maybe even 700. Let's explain that. So hypothetically, this is going to remain my same stop loss and it's gonna be the same exact level. And for video reasons, we're gonna say this is going to be my max loss, which would be 2% of my account. However, the target on this trade is going to be a little bit different, and that ratio is going to increase all the way to roughly a 3.0. We can come down and see that ratio right there. Now, again, this is just hypothetical, so the numbers are going to be exact for the video. But I'm always looking to have at least a 2-to-1 ratio, meaning my reward is at least double of what I'm risking. So let's say you're trending back up here, you're moving, and you actually come up and you hit that range. So at this point, I would make my $300 at this level. But let's also say the trade didn't go so well. Let's say you were moving in a very good way, you kind of started pushing up, and then you took a turn for the worse like we all know, and all you saw was red. So right here, I would lose $100. But let's say we are playing a numbers game here. And when we're coming into trading, you have to realize you are playing a numbers game. So let's say I take this trade 3 times or the same type of trade. And I know my strategy will work, and it has worked based on how I've been trading it, based on statistics. If you haven't watched the educational video, that explains a lot into that as well. The link will be somewhere at the end of this video going into that strategy as well. And so from this range, it allows you to know that you can fail once, you can fail twice on a trade, but all you need to do is win once out of 3 times to stay profitable. Because what happens here, I'm losing 100, 200, but I've just now made 300 on this trade alone. So I am now profitable on the day after losing twice. You always want to give yourself room to profit even if you are going to lose, because you are going to lose down the road. That's the name of the game. You are not going to be a perfect trader. You're going to lose. So allow yourself margin for error. These numbers should never be the same. You should never want to make the same amount you're willing to lose. You'd rather just go play blackjack because your odds are going to be just about the same. This is where everything comes together and shows you what you're doing wrong. Execution. Because you're looking at a chart and you're thinking, what am I doing wrong? Do I just move my take profits up so I can make more money? It can't be that simple. And it's not. The problem is you're not looking for the best opportunity. And what I mean is I'm looking at a trade and I'm saying if I can get into it with a tight enough stop, with enough room to go to the upside on said support. Again, I showed you a strategy that gives you great statistics with plenty of upside opportunity, but it requires you to sit and wait for the best opportunity and the best stock picks. So yes, if you want to risk 1-to-1 and have that fear of not making enough per trade, then go ahead. However, if you want to take that step into the long term, then this is what you're gonna have to do, is be a little bit more patient and be more conservative with your entries to make sure you're getting the best opportunities. A great example right now is the Bitcoin chart. We can historically see this level is a massive, massive support. And I really don't even trade crypto, but we can see the likelihood of getting a very strong bounce from this region to give us that 3-to-1 odd ratio. That is the opportunity you're looking for, but you only get this opportunity ever so often, and you have to keep your eyes open looking for those key plays. And if you have questions specifically about this video or any other type of strategy that I go over on my channel, comment down below, because everything ties together and you will profit if you do the work.